Welcome back to Investing Talk Podcast.
Today we're looking at Lululemon Athletica.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. Lululemon, it continues to be one of the most intriguing stories in discretionary retail right now.
It really does.
They're showing this tremendous resilience even as the broader sector is kind of struggling.
Right, under the weight of inflation and, consumer preferences being all over the place.
Exactly.
And resilience is exactly the word that jumps out at me. You look at that Q2 2025 snapshot. It was a tough environment, yet they delivered some pretty impressive numbers.
They did.
We saw revenue land at, $2.5 billion? Now, okay, that was a marginal miss against some of the highest expectations.
A very small miss, yes.
But the context here is everything, right? Hitting that kind of scale in this retail climate, it just shows incredibly strong underlying demand.
It does. And that small revenue miss really shouldn't overshadow the bigger story here, which is the company's defensive strength.
Okay.
What's most crucial isn't that top-line number. It's the resilience of their margins.
Ah, the margin.
Gross margins held firm at 58.5%. For any premium brand, maintaining margins like that in this kind of economic uncertainty is the ultimate sign of pricing power.
That's the real differentiator, isn't it? It tells you they aren't being forced to play the discount game.
Not at all.
If they're keeping markdowns limited while their competitors are just slashing prices to move inventory, it means that whole product scarcity and customer loyalty thing is working.
It's a flywheel operating at maximum efficiency. They maintain that premium status.
Exactly. They've cemented their position as a high-end specialty retailer, not just another mass-market apparel brand.
And that margin strength, it tells you their supply chain costs are under control. But more importantly, consumers are willing to pay full price for that perceived quality and brand cachet.
So we have a healthy Q2 foundation. Let's look forward a bit. What are the official projections based on this strength?
Well, the projections are built on internal execution. The near-term guidance is solid. Earnings per share are projected to increase by a healthy 4% in 2025.
Okay, 4%.
And the full-year revenue target is aiming for about $11.5 billion, which is 5% growth overall.
That's solid.
It is, but that near-term data is almost overshadowed by their ambitious long-term strategy. That's where you see the real upside potential and, well, the real risk.
You're talking about the power of 3x2 strategy. I know the number is huge, but for anyone who hasn't tracked every investor day, just how dramatic is this?
Oh, it's dramatically ambitious. They're targeting accelerated structural growth. Lululemon is projecting a 14% compound annual growth rate.
14%?
Aiming to hit $12.5 billion by the end of fiscal 2026. And to do that, since the North American women's market is pretty mature, they need entirely new engines.
And what are those three engines? Because hitting a $12.5 billion target requires tapping into groups that, might not be their core image right now.
Precisely. The strategy really hinges on three key pillars. First, accelerate digital sales. Second, and this is huge, double the men's segment revenue.
Double it.
And third, the most ambitious goal of all, quadruple their international revenue.
Okay, doubling the men's segment, that is a massive undertaking in a space where, Nike and Adidas have such entrenched loyalties.
It is. They're leaning heavily into the technical innovation that made them successful on the women's side. It's not just about comfort. It's about engineered performance.
So things like the ABC pants line.
Exactly. Blending high performance with an office-appropriate look. They're selling a premium lifestyle, not just workout gear. And that's how they avoid a price war.
And the other big one, quadrupling international revenue. That sounds fantastic on a slide, but realistically, isn't that a much riskier bet?
It absolutely carries higher risk. It's based on two big assumptions. First, that this whole athleisure trend is a global thing, not just North American.
Which seems like a safe bet.
It does. And second, that their community engagement model can be exported. They have to replicate that organic flywheel they built here in, China and Europe.
That's a huge lift, and that kind of global growth is expensive. So let's talk about the balance sheet. How healthy is the foundation supporting all this ambition?
The foundation is exceptionally robust. It's arguably one of their biggest strengths. Total debt is extremely low, sitting at only $1.2 billion.
And the debt-to-equity ratio?
It's about 0.25.
Can you break that down for our listeners? What does a ratio like that really tell us?
Certainly. It's a measure of financial leverage. An industry average might be closer to 1.0. Lululemon's 0.25 means their operations are overwhelmingly financed by equity and profits, not by borrowing.
So they have flexibility.
Massive flexibility. They can fund expansion in Paris or Vietnam without taking on significant financial risk, especially with interest rates where they are.
And that flexibility, it's fueled by some pretty impressive cash generation.
It is. $450 million in free cash flow in Q2 alone. That's a 10% increase year over year.
Plus, they're sitting on $1.8 billion in cash. How does that help them against giants like Nike?
It's a huge competitive buffer. A weapon, really. That cash means they can self-fund everything. They don't need to issue stock or take out new loans.
So when times get tough.
Competitors pull back on R&D. Lululemon can deploy that capital strategically. They can invest in new fabrics, buy back shares, or even make tactical acquisitions.
It's their war chest. And that brings us right to the competitive moat. In this crowded space, what makes their dominance sustainable?
The moat is really a trifecta: proprietary innovation, premium quality, and deep community engagement. It's a difference between buying clothes and buying engineered gear.
The fabrics like Nulu or Nulux?
Exactly. Competitors struggle to replicate that level of performance cheaply or quickly. But the community layer is just as important. They don't just sell apparel, they sell an experience.
Right, the in-store classes, the local ambassadors.
That creates an organic demand. That means they don't need the same heavy global endorsement spending that the big sportswear brands rely on.
And the whole global strategy is designed to leverage that just at the high end of the market.
Absolutely. Tapping into global wellness trends, but with a differentiated exclusive product, they're avoiding that messy middle ground.
Okay, let's switch gears a bit and talk about the stock itself, the technicals. After that big drawdown earlier this year, what are we seeing now?
We've seen a really strong stabilization. The stock found a firm footing in a major demand band between about 141 and 105.
And that support zone holding firm, what does that suggest?
I'd suggest sustained, dedicated buying interest. Institutional money sees that low 100s range as a really attractive entry point.
So the stock is currently trading around 169. What's the potential upside trajectory from here?
Well, those stable support levels indicate long-term structural confidence from buyers. The key upside target is certainly to retest the prior all-time high, which is way up at 335.
That's a significant return if they hit those growth targets.
It is. And the momentum indicators seem to confirm the trend is healthy for now.
How so?
The stock is trading comfortably above its 50-day moving average, which is around 155, and more critically, above its 200-day, which is at 140. This confirms the buying pressure is supported by the longer-term trend.
The market seems to think the worst is behind them.
It does.
What's interesting, too, is the low beta, only 0.85. Why is that relevant for investors?
Beta is a measure of volatility. The S&P 500 is 1.0. Lululemon's 0.85 means it's about 15% less volatile than the market.
Because their customer base is a bit more insulated.
Exactly. They cater to a higher income demographic, so their sales are slightly less sensitive to broad economic swings. For investors seeking relative stability in retail, that's a huge draw.
And how is the big money, the big funds, feeling about this picture?
Sentiment is overwhelmingly positive right now. Analyst price targets are averaging between 300 and 340.
Reinforcing that retest of the old high.
It does. But beyond the analysts, we're seeing significant internal confidence.
What's the evidence for that? Insider buying.
We've seen positive insider buying trends, yes. Key executives, CEO and CFO included, have reportedly increased their holdings. And when the people running the business are buying, it signals deep confidence.
That's a powerful signal.
And you couple that with strong institutional inflows from players like BlackRock and Vanguard. It suggests a powerful consensus that there is substantial upside from here.
Okay, so let's look at the horizon. What are the near-term catalysts we should all be watching for over the next, say, 3 to 6 months?
The primary trigger will be the Q3 earnings release, expected in January 2026. That's our first real look into the holiday season.
Followed by the full holiday report in February.
Which will be absolutely crucial for assessing consumer demand. And of course, you have the constant mini catalysts from new product launches.
Especially in men's and international.
For sure. Beyond products, though, corporate events are shaping the strategy. We have the ongoing leadership transition with Andre Maestrini stepping in as President and Chief Commercial Officer. His tone will be key.
And of course, the ever-present rumor mill.
Indeed. persistent rumors about aggressive expansion into new Asian and European markets, and also some chatter about potential strategic acquisitions in the wellness space.
So not just apparel.
Not necessarily, maybe adjacent tech or services. If any of that crystallizes, it could definitely accelerate things.
Okay, we've covered the strengths. Now for the necessary check.
That correct?
Risks. What could derail this story?
The competitive risk is constant. You have Nike, Adidas, Under Armour always innovating, and you have fast fashion retailers who can quickly copy the look for a fraction of the price.
Which means Lululemon has to constantly deliver genuine breakthrough newness.
They do. And that leads directly to the execution risk. If that product pipeline stalls, if they stop creating those must-have items, that premium pricing model could come under serious pressure.
And that's especially true for the international push.
Absolutely. There's a significant execution risk there. It's about more than logistics. It's about cultural misreads.
That's a great point. What works in Vancouver might fall completely flat in Shanghai or Berlin.
It requires meticulous local research. And finally, you just can't ignore the macro environment. Tariffs, sustained weak consumer spending. Even this powerhouse will feel the drag if the high-end consumer pulls back for too long.
So we pull all this together, the solid balance sheet, the resilient margins, the strong technicals, and this aggressive roadmap. What's the overall investment view?
The structural growth story remains powerfully intact.
Yeah.
You have a combination of elite fundamentals, low debt, high cash flow, paired with multiple catalysts.
So the structure strongly supports continued growth.
It does. It sounds like a company that has used its financial health to buy itself options. The option to expand globally without the crippling fear of a downturn.
That's the takeaway.
I think so.
Yeah.
However, the real test for Lululemon will be whether its new leadership and product pipelines can successfully execute that power of 3x2 international expansion.
Without breaking what already works.
Exactly. They have to get that growth without compromising the premium brand loyalty and tight control they've so meticulously built in North America. That global execution. That's where the next chapter of this story will be written.
A lot riding on that bridge between market dominance and international ambition. If you want to stay informed on market movers and crucial analyses like this one, make sure you hit that subscribe button.